This week, should one carry a mortgage into retirement? Welcome back to the Industry Leader Update. It used to be financial advisors would encourage their clients or plan for them to pay off their mortgage before they retired. Ah, yes, that day when Mr. and Mrs. Smith can burn their mortgage note. What a ceremony that is. However, fewer older Americans are now able to pay off their home mortgage before they retire. Consequently, we're seeing more advisors suggesting that one should carry a mortgage into retirement and even throughout it. You can't eat your home is a common phrase, and it points to the fact that one's home equity is actually useless until you separate or extract it. And for one to extract their equity, that requires either that they borrow against their home or they sell it outright. In other words, their equity is tied up into the bricks and mortar of their home. However, that equity is not necessarily safe either. And that's a painful lesson that was learned by homeowners during the great housing crash and recession of 2008. So what are the advantages of having a mortgage in your retirement years? One obvious advantage that's typically touted is the tax deductibility of mortgage interest paid. However, the Trump-era tax reform boosted the standard deduction. In 2021, married couples filing jointly have a $25,100 deduction. Single individuals can automatically deduct up to $12,550. Your average middle-class homeowner is unlikely to have itemized deductions, including their mortgage interest, that will exceed that standard deduction that we have today. So for most, carrying a mortgage into their retirement for supposed tax savings is neither practical or realistic. Now, according to financial experts, another advantage is that you have a hedge against inflation with a home. Homeowners with a mortgage stand to win, with today's average 30-year fixed interest rate being at 3.52%, and then inflation, consumer goods, are surging to 7% or higher. But don't forget, inflation of home values. They have risen or been inflated by nearly 20% in just 2021, and that's a 17% spread between the cost of financing the asset and its gain. However, not to be overlooked in this equation is the actual aggregate cost paid over the life of a mortgage loan. The mortgage interest paid typically over the amortization or 30 years will typically exceed the principal amount that you borrow. So what are the disadvantages of having a mortgage in retirement? One is the anxiety of having a large debt that must be serviced or paid each month. Those looking to avoid this pay off their mortgage for peace of mind. However, in paying off the home, they have now tied up, again, all their equity into an illiquid asset. Even worse, some may liquidate their retirement account in part or whole to pay off their mortgage. Another disadvantage is less cash flow. Keeping a traditional mortgage during one's retirement years may not be the best choice unless the homeowners can make monthly mortgage payments without sacrificing their standard of living. If the mortgage then becomes a burden, the homeowner should stop and ask themselves, what really is the end game here? Why am I making mortgage payments? Are they pinching pennies so they can pay down a mortgage in the hopes of passing it on to their heirs debt-free? If inheritance is not a concern, then why are they continuing to sink money into a home that's going to remain after they pass on? They can't take it with them. Then there's the uncertainty of being unable to tap into their home's value in the future. It's a question. If interest rates rise or a home equity line of credit or cash out finance may not be possible. One option many homeowners overlook is to take a reverse mortgage. Now, while the retiree is certainly carrying a mortgage of sorts, a reverse mortgage into retirement, it's a loan that actually allows them to pay each month or pay less when the money's tight, or simply not pay at all. Either way, they have eliminated the burden or required monthly payments, and they've secured a future source of funds should they need it. Now, when it comes to carrying a mortgage into retirement, there are four choices: sell the home, keep the mortgage, pay off the mortgage, or transform that mortgage into a loan that does not require monthly principal and interest payments, a reverse mortgage. Now, what do your typical discussions centering on the pros and cons of having a mortgage in retirement sound like? You can let us know in the comments section below, and we would kindly ask you to share this video on your social media profiles, LinkedIn, Facebook, and Twitter. And don't forget, you can subscribe to our YouTube channel and hit the notification bell. That way you never miss an upcoming episode. If you like to listen to your news rather than read it, we've got the solution mention for you here. That is Heck World Weekly, the nation's only weekly podcast for the reverse mortgage professional. You can also listen and subscribe on iTunes. That wraps it up for us this week. Thanks again for joining us. Until then, happy originating.